What's up, everybody? Joshua Salvetti. Welcome to the High Performance Trader Weekly Webinar Live Trade Review. Okay, so I'm Joshua Salvetti. Welcome. First of all, so today, me and a bunch of other team members are going to be running through trades that we take, right? How we implement our skills, what sort of skills and strategies we use each and every single day getting in and out of the market, right? So it's very important. We talk about this all the time to not just develop a strategy, right? But to really focus on what it takes, right? The ability to implement this strategy daily, right? So what sort of things do you need to go through? What sort of habits do you need to be able to trust yourself, trust your analysis, and to be able to get in and out of the market on a consistent basis, right? So we're going to be breaking through that. What's going on, Debo?
Yo, what's going on? Good to be here on a Saturday.
Yes, sir.
These trades, I think we had an amazing week. In fact, the last 2 weeks have been absolutely amazing, and I'm excited to get into it.
Yeah, dude, we've definitely put on a lot.
I think you're muted right now.
Oh, there we go. Yes.
Yeah, got you.
So we have definitely grown so much, right? So we started this Discord back in January, right? We decided our main goal was to set the standard high, right? We wanted a place where you can come, show up, and learn how to hold yourself accountable and to become a better trader, right? Because we talk about this all the time. It's not your ability to show up and look at the charts and put on a winning trade. That takes no skill. That takes nothing but luck. Anybody can click a mouse and put on a profitable trade, right? But what sort of standard or environment or culture does it take to really understand the mentality you need to consistently get in and out of the market, right? What sort of environment really fleshes out the importance of being able to follow your trade plan, right? Or journal, or dive deep into your journal, figure out where you go wrong, right? So that was the overall goal in High Performance Trader, right? So High Performance Trader was basically a way or a place that you can come and become the best trader that you ever could possibly imagine, right? And we just wanted to come up with a place where you can come, learn what to do from others, right? And really dive into that, because I feel like so many traders go through every single day making the same mistakes, right? How do you feel about that, D?
I mean, for me, it's accountability. One of the main things that's done for me is provided a place for accountability.
Yes.
And we all know trading is kind of a lonely pursuit. You know, you're by yourself. You're fighting you all day long.
Right.
And no one's going to control you when you didn't follow your rules.
Exactly.
Thinking like, why the fuck did I break my rules? I had this. I just messed up this one thing. Nobody really knows what that's like except another trader, and everybody has to go through that for themselves. But the Discord has provided a place where we can learn from each other's mistakes and provide that accountability. Because if you're just sitting by yourself trading and nobody sees what you're doing, there's not really much accountability.
Right.
There can be accountability, but the Discord has just provided a place where we can share that accountability with each other,
exactly,
and hold each other accountable.
Exactly.
And it's just clear that that's been a massive influence in our success in this Discord.
Yes.
And I know that's one of the things I get out of it, and that's why people are joining and absolutely loving it in here.
Yeah, no, and there's progress all across the board, right? And what I absolutely love about it is it's not the strategy, it's the mentality, right? Like you said, you're in a constant battle with yourself. You're in a constant battle with your trusting your analysis, with even showing up on time, right? You're in a battle with doing the work, diving into losing trades, all of it, right? It's all a battle between yourself, right? So it's really good to have a place that's structured and other people putting in the work and actually seeing the results, right? And it's it's really good. I love it. We've been putting tons of work in, and it's been really good, right? So we're gonna just break right into the charts here. We had a really eventful week. Tons of just regular volatility, right? Like I find myself not really diving that deep anymore into external factors, right? Like obviously you need to be aware, right, if there's certain things going on. But really, what I do is focus every day I show up to the market with the same mentality, right? And it's identify your levels, right? Understand the conditions and trade accordingly and adapt. And that whole philosophy has been really beneficial. The whole identify and adapt, because the market is going to constantly throw crazy stuff at you, and it's very important to be able to shut all that out and just look at what actually matters.
Yeah, every month there's something different, right?
Yeah.
Or every week. Last week we had CPI. This week we had non-farm payroll. I mean, what was it? Last month when we had non-farm payroll, we had an absolute crazy sell-off, right? I
Yeah.
think that was one day when we dropped, just like the market just continued to tank.
Yeah.
But every single week there's something different. You have to know how you're going to approach it with structure.
Exactly.
You can't just randomly gamble. Every single week provides different opportunities.
Yeah, and you take that gamble out of it once you really understand the mentality. So lately, for me, if I don't understand the market conditions, I won't put on a trade. I won't.
Yep.
And so now I pretty much sit back. I'm super patient. I found myself taking less morning trades. And do I still take them? Absolutely. But I just find myself taking different setups. And Monday was kind of a chop day here, right? We're going to run right through it. I'm going to whip out the 2-minute. But I really feel it.
Monday, Tuesday were rough this week.
Yeah, Monday.
At least for me.
Yeah, no, it absolutely was. I think, this was it right here. So we had a nice rally right into supply over here, right? Pre-market high. And let me just check something real quick. I want to see what the day prior to it looked like, because I'm sure it's about the 10-day, 2-minute.
Monday was July.
Right. Oh yeah, look at this. This was all over the place. Okay, so what I do is I'll always. Oh, hold on. Monday is right here. Okay, let me see something real quick. Yes, Monday. Oh yeah. So okay. So this day was a little funky, right? Because you had previous day high right here. It looks like we kind of held above it, but so when pre-market high is right above previous day high, there's a couple things I need to see, right? So previous day high is definitely an area we use every single day, right? And we look to see what happens around it. But when you got pre-market high right here with some pretty intense selling, you can't just ignore that. So for me to go for a more trending day to the upside, I got to hold pre-market high, and you can see we couldn't here. We got a little breakout above it, and then Todd, this is the setup, man, and I thank you, because I have been using this. I did not take this trade, but that lower high right there has been telling me everything. That right there has been like, price rips into a supply zone. You make a lower high. Look at the volume. Bam. Peaks right up. Tanks. I love that setup, man. We traded that setup Friday. I love that setup right there.
Yeah, it happens a lot.
Oh, no. It actually, so that setup happens all the time. It's pretty common when it's in a demand or supply zone, right? So this right here is really symbolizing the reversal. And I wish I was able to identify this when I was a reversal trader, because this right here would have really helped me avoid a lot of traps, I feel like, this lower high. So, we got that nice lower high. Then I was looking for a break and retest to the downside, which didn't happen, right? And Darren, right, we talk about waiting for the retest. This is
short here.
Yeah, this is why I like to really wait for that retest. I'm not sure.
I think I would take it again.
Yeah. Oh yeah, you hopped in short right here.
Yeah.
Yep.
No, I think I waited. I waited until we got the retest. I can't remember exactly which candle I went in on. Oh,
yeah.
I tell you what it was. It was I saw this rejection on VWAP.
Yeah.
You see that?
Right here. Okay.
It was like bearish engulfing.
Yep.
That bearish engulfing candle on the 2-minute off of VWAP. That's why I took it short, and then whatever, I got stopped out pretty quick after that.
And that's the beauty of it. That's the beauty of it right there, is that you're literally risking 20 cents to make a potential, what is that, $1.50 move. So you're literally going short. You're risking, look at this, because if price gets above this VWAP level, you're literally risking 20 cents here to make a potential $1.50 move. That is exactly the way you want to trade, right? So that's going to keep you from
I love that setup.
yeah,
it was a rejection of pre-market high, rejection of high of day. So we basically failed to hold high of day.
Yep.
And we saw strong selling come in after that.
Yeah.
I mean, I'm taking this setup in the future, 100%.
Absolutely. Absolutely. And all right, so then it rips. We make this double bottom. Price then breaks below this level I got here, right? So I love so the opening candle usually tells you so much, right? So I get this level from the open candle, right? Now, if we can hold below this level, I'm looking short. If we hold above it, I'm kind of looking long. But this supply rejection off pre-market high, we were in this line right here is yesterday's high. We kept bumping into it, right? So now I'm really bearish. We can't hold previous day high. We get this double top here. Price then falls below. I go short right here. And price literally, my stop loss is right above it, or in this case VWAP. And I took this trade short. It was literally almost $1 move. But towards the end of the day, these dollar moves really do pay. I mean, this was almost, I think, 60%, 50-60% return. So it missed my demand zone though, right? So, but I got out, right? And once again, Todd, when this candle blows out the one in front of it, that's telling you a lot. You know what I mean?
I actually got stopped out on this one. I went short, and right when price came back to that level, it knocked me out.
And
then it sold.
And then it tanked. Yeah.
Yeah, and it happens.
Absolutely.
It's all about that. The better entry you get,
the
more you're gonna have to deal with drawback until you actually stopped out. So
exactly.
It is what it is.
But
that's why you got to have a certain criteria. Looking back, I mean, technically, I should have waited until it held above that level to stop out.
Yeah, but that's fine. I
got rules.
Exactly. Well, this is the thing. You followed your process. That's all what matters. If you follow your process, I don't care if you get stomped out. I don't care if you lose money for a week. If you're following your process is going to end up paying. I promise you, right? There's two types of traders. There's the traders that show up and just put on trades, and then there's the traders that follow their process. Now, who would you give your money to trade for you? If you couldn't trade and you had to give somebody your life savings, right, to make money, who are you going to give it to? Are you going to give it to the guy that just shows up and puts on trades? Are you going to give it to the dude that makes structured trades in such an unstructured environment, right? So that's why I always talk about it, but sticking to your structure is key. And look, that level never broke. That level never broke until the end of the day when this massive move happened, right? But and then
it's tough. Like that's not. Once I saw that sell-off didn't have any continuation, I was like, all right, I'm not dealing with this for the rest of the day.
Yeah.
Like that at that point, I was like, this chop is too much. I'm not dealing with it.
Right. Yeah. It was extremely choppy, but
garbage.
Yeah. So that was Monday, and then look at how that level played such an effect the next day. Isn't that crazy? Look at this. So hold on, let me just get rid of this guy real quick. Remove previous high.
Oh yeah, that's the essence of these critical levels that we
Yeah.
talk about.
Look at this.
Pull out a supply zone if you want. I mean, this day it happened to work better as just a line, you know?
Yeah.
And then, holy shit, right to the cent it rejected?
Yeah, it literally did. Hold on, I'm just real quick checking. And then look at this. So, yeah, okay. So, yeah, that was to the T, my man. Look at this. So those opening candles are so. I mean, that's literally all I got it from was an intraday level, right? Because a lot of people used to be like, or I used to think like, oh, the 1 hour chart's going to give you a demand or supply zone with way more weight, which yes is true, but don't neglect these intraday levels either, right? Because this is nothing other than an opening candle low, right? Which was a battle, which held throughout the day. And then we get this massive sell off. This demand zone gets invalidated, but it's still low of day. So I'm going to leave it on there because every day I got low of day, end of day, high of day, all mapped out because I'm looking to see who defends these areas. So end of day was way up here. Don't even really have to worry about it. And then, okay, so then price literally comes down. We hold below. Well, actually, we open right above low of day. Price rallies, breaks previous day high or low. But once again, we have pre-market low right next to it. So I do not take this short, right? I don't take this short. If pre-market low was above this level, then I'm looking for it. But I cannot neglect this pre-market low right here, right? And price came right into it. And I didn't put on a trade until the end of the day here, right? Because I used to take these double bottoms, right? And I rarely trade reversals, super rare. I did trade this triple bottom, but it was because it was right here when I took it. Actually, no, I actually hopped in this rather quick. And I'll show you. It's the 2 minute. We got tons of price tried to break low of day here and got sucked up immediately. And check out the volume. And this is why the volume is so important. This right here, right? So, I rarely trade reversals, but when price came into here with a lot of volume, I entered the trade long once we broke above the previous candle, right? And price just rallied, and I just kept my stop as if it was all break and retest, right? So, and I really want to flesh that out so everyone understands that, right? Because it's so important. So I go long here. Price rips, consolidates, creates a little support over here at 45588. So now my stop out, I'm still going to keep it probably right around my entry. And this was just one of those trades where I was like, dude, I'm willing to put on risk. And that triple bottom held well. Look at the volume every time, though. Like, look at the volume right here. This was at 10:30 or 10:15 a.m. Tons of volume right here. So that right there is telling me that large money is here defending this area, right? So next we get another, hold on, duplicate, get another retest in this level and got that volume and I was over. I was like, okay, I'm in. And then it's just breaking retest to the upside.
That's solid.
Yeah. And then and it was actually really cool because I held through all this. And this is the importance of buying contracts in the money. It is extremely important to buy contracts in the money, especially if you're getting in trades later in the day. Because even in the money contracts, this pullback cost me a lot. But just my style of trading, I'll buy contracts in the money. My stop loss is here. And I'm gonna hold it. Because this isn't my criteria of getting out, right? Because I still have this level as my stop out, and that was just how I traded it this day. And then you can see price broke right above it, came up, boom, boom, boom.
Beautiful break and retest.
Yep, break and retest. Even this guy right here got 8 and up, and then price ripped above it, and then I ended up getting out about right here. So it was definitely really it was a really well managed reversal trade.
Yeah, the problem with 0-day options is like as you get towards the end of the day, your buying power is getting lower and lower. You're just like, I'll just go further and further out of the money.
Yeah.
And you just opt to get cheaper and cheaper. But the problem is then you need the market to move in your direction
immediately. Yeah, immediately.
And when you put yourself in that position where you need the market to move, it totally switches the way that you manage that trade.
Yeah.
And
100%.
And I think I didn't realize it for a really long time. And I basically realized that I was just screwing myself by setting myself up, and it would just mess up my psychology.
Yeah.
And that's why I won't mess with out of the money contract anymore. At the money at the beginning of the day is okay, and then anytime after noon, I'm going within the money, 100%.
Yeah, absolutely. Because that time decay is going to get you, and what it does is just it makes your trade so much harder, right? So we already are looking to capture a move. If you add that variable of time decay like massively, it's going to hurt, right? That's why futures are so damn appealing, Todd. Because
I'm gonna get you in
there. I'm telling you, I'm about to. I definitely want to open an account for futures, just to because. It's like
just to know what it's like trading with no theta.
Exactly. You get rid of that. It really might be a game changer. So.
Yeah, and I've been watching YouTube, and a lot of people. I see a lot of people.
Yeah, me too. Yeah, they're
futures.
They're getting rid of all that nonsense.
Yeah.
But
mass active options traders.
Yeah. Well, and it's like I'm trying to think of a way, like something to compare it to. It's like playing one-on-one against Jordan, right? That time decay is Jordan, right? And then going and playing one-on-one against I don't know, maybe someone else. I don't want to act like it makes trading that much easier because it's still the same. But yeah, getting rid of that theta would be, even when I used to leverage trade crypto, it was so nice not having to worry about all that time decay and XYZ, because it's that stuff it really hurts you.
It's more like a set. You know what you getting.
Exactly.
When you getting it.
Yeah, you can stay in the trade all day and you're good.
No, but it closes at the end of the day.
Oh,
so
yeah,
let's say you wanted to make a move and it doesn't do it during that day. You can't just hold it and sell it sometime in the night. Like that shit expires at the end of the day.
Right.
Oh yeah. Well, most of my trades are 12 minutes or less.
Yeah.
Right.
Anyway.
Yeah.
But if you're expecting a large move, you do have a certain amount of time that it needs to be fulfilled within.
But it's just not affecting price. Well, until it runs out. All right, so now
it's different.
Yeah. All right. So now, so that was, and you guys want to talk about that day? Does anyone got any trade they want to talk about on that one?
Tuesday.
This one right here.
We still on Tuesday?
Yeah.
I just think it's crazy how similar that was to the previous day. So we had 2 inflection points created within I don't know, what is that? Between 6 and market open, like high and a low, and we touched them both like that. And the exact same thing happened on Monday, where we had inflection points created in pre-market.
Yeah.
And I haven't been putting that much weight on inflection points. I mean, obviously, if the inflection point is pre-market high or pre-market low, I'm definitely looking at it. But other than that, I think I want to put more weight on it. Especially Tuesday, it lined up with that zone with that critical level from Monday. So that's basically showing you through price action that there is a seller still there,
right?
And if he shows up again, play with him. So,
yeah, and that's that.
Pre-market levels are different.
Yeah, and that's like the whole essence of trading for me is like, okay, a buyer's here. Now, if price falls below this level, and you get the retest, this buyer who's buying 5 million shares here, and he's buying 5 million shares here, right? and the sellers are only selling 3 million shares, which creates the price action, right? Which means there's more demand, which means price increases, right? And now sellers are maybe selling 1 million here, and then buyers come in right here with another $5 million order, and there's not enough supply, which then increases the price, right? So I always like, every day, every moment I'm looking at the market, I'm just painting a picture of supply versus demand, right? All day. And I love it because it's like, at the same time, there was so much selling that price can never come back to that level. And then this seller that held strong here and here, he just dumped massive shares here, causing price to break and form its own intraday levels or aftermarket levels, and you're just continually getting these lower lows and lower highs, and it's constant break and retest, and which led us right into the next day, which was this day was phenomenal. Let's just see. We had this demand zone here. I'm going to show you where I got this, right? Once again, I use the 1 hour religiously. I love the 1 hour. It literally helps me just understand the conditions so well. But okay, so we have this level right here, which was 451.70, right? Give or take. Now we break. Okay, so we hit it pre-market. Buyers show up, defend it with strength. Look at that, right? Massive selling into it, and all that selling is met with buying, right? So that is definitely a level I'm looking at for buyers. Now, this, we're still in a pretty well controlled downtrend, you could say, right? So we're constantly we're making lower lows, we're making lower highs. So you cannot neglect that. And we come down into a demand zone. So now I'm thinking if sellers can push through that demand zone, we're gonna tank, right? But it's pretty far away. So let's look at how this day played out. Once again, 2 minute, and bam. Okay, so we come down. First thing I'm gonna do is mark this level, right? Because this is always an intraday level, right? Basically the open, wick, whatever you want to call it. And then we come up and we cannot make a higher high. This is extremely bearish. And then price just kind of consolidates. And I'm not going to lie, I was thinking long here. Because if you look, you get a pretty well 50% retracement on the fib. Granted, you were breaking below the 61.80 level, which is pretty bearish, and this is why I really like to be patient on my trades, right? Because this right here is not enough. Hold on, let me just get rid of this. This isn't enough for me to put on a trade, right? When the market looks like this just isn't enough for me. You know what I mean? Like, nope. We're super far away from a demand zone. We're not anywhere close to any supply zone. End of day was way up here. So I was thinking gap fill to the upside. But at the same time, if we couldn't hold this level, that's buyers haven't proved to me they wanted it yet. That's just not my criteria. And price then breaks below that level, which was critical. And then this is where we first entered the short. Perfect break and retest to the downside. And though pre-market low was close, I was visual. I really wanted to break that demand zone, right? So we come down, come up for the retest. I took her short right into this demand, and she actually broke through. And my target was much lower. Let me see where my target was actually, because I wanna figure out what was going through my brain here. So it was this day. So I had a target right here from this. Okay, so that was my target. And I'm just.
Was that 451.50?
Yeah. No, that was 450 on the dot. So my first target was 450. And then my second target was right there. Okay, so now let's get on that 5 minute or 2 minute. So, and this was the day where I threw it right in the Discord. I'm like, use the 1 hour to tell you where price is headed. So, and look at that, literally, oh my Lord, look at that perfect tag right there. Let me show you, and once again, show everyone where I got that. So this level right here, we're breaking this 451.70 level, right? Let me just draw a demand zone there, so we all see that this level, we're breaking this. My next target's here. Why? Because that's the last time buyers showed up. Buyers showed up very strong here. So I'm literally looking to capture this move, and that was
yeah, that is the S market imbalance.
yeah, look, yeah, that's exactly what you. Yes, that's how you get your targets. I mean, look at that. And now this was pretty sketchy because I entered here. Right here, I'm up. I think I'm up like 50, 60, maybe even 70%. And then price retraces. And this is just where I'm at as a trader. I'm not going to tell people they need to do this, right? Everybody's different. But I was so confident in this trade to the downside more. And it was because of the 1 hour. I actually added to my position at 451.70, targeting that 450. And let's just whip out the 1 hour real quick. Yeah, that and that's really like and we talked about this before, but when you don't need this trade to work, it's a way different game, right? Like when you're like, if this trade goes against me, so what? The market's going to give me another opportunity tomorrow. It's fine, right? And that's kind of where I was at. The 1 hour had this candle. I mean, look at this. Look at this super red candle right here. I just didn't feel like buyers could soak all that up. There's a probability of that, but it was a way higher probability that this candle was going to. So that's what it looked like. Massive red. And then look at the next hour candle. Literally a basing candle to the downside. So I had
Josh, I think that your entry had everything to do with your ability to hold on to this trade. So imagine if we had broken pre-market low, like 2 or 3 candles after breaking pre-market low, we're down here, and you want to take this trade short down to there, and you had hopped in right there.
Right.
You probably wouldn't have held
exactly
until price retraced all the way back. I mean, you would have been down at least 40-50%.
Yeah. Yep.
And so your confidence to hold till the trade hit your target is completely different based on where you got in.
Exactly.
You know what I mean?
Exactly.
If you had gotten in, it wouldn't have necessarily been something to brag about that you held all the way until price came back, because you're definitely going to be in massive drawdown at that point.
Yeah.
So the only reason that you held and you were even looking to add is because you had a great entry,
yeah,
and your trade wasn't necessarily red when it did that pullback.
Right.
So I just think those are two different scenarios.
No, 100%, right? We talk about that. So you enter right here, right? And you're down, right? So you enter right here, which
you zoom in a little bit, Josh?
Yeah. Okay.
My eyes aren't working so well.
That's all right. So, all right, ready? Let me just make this a little bigger so we can all see that. No, 100% right. So you wait for a pre-market low to break. You enter just jumping in, which means you're really going to get in there because market order, you're not going to land a slam dunk entry getting in below this.
Sure.
So this is slippage right here. This is going to cost you about 20%, which is a main reason why I wanted to enter on a nice retest, because when price comes up, you can literally buy at this price. It's sketchy because this candle is completely green and you're buying short. You know what I mean? So it's like, but if you have confidence in your strategy and in your setup, you are going to buy at the best time. So you're 100% right. You buy right here. This moves. You're already up around 70-80%. Price retraces, and you're still up about, I don't know, I think I was up like 10%, 15%. But I was still willing for that. And then this last move to the downside brought her all the way back up to like 100%. And being able to add to the position.
If you were red, I don't necessarily support that behavior. If a trade moves against you and now you're doubling down, I just think that's the wrong mentality. And even if that's why I'm saying the entry makes the whole difference.
Exactly.
You know?
Exactly.
Yes, the market ended up in the same place, but if you're adding to a trade that's already negative, that's just behavior that you want to avoid in general.
No, and it's a really good point that your entry has everything to do with that. 100%. So yeah, that was the move there.
Right.
Well, you know, really good move. Hit that 450, and then broke below it, and then that was it. That was my only trade for the day. Perfect example of it, though.
What I think is cool about this day is so I was watching. I think I first made a move on SPY, but we literally let the market sell off in the first, what was that, hour of the day.
Yeah.
We let it sell off, and we were not pressured to get into this trade until we got right around pre-market low. So, like, I think what I wrote in my journal is, like, you do not need to capture the entire move from the top to the bottom. I literally made 115% from that first initial move off that break and retest where we got that little circle.
Yeah.
And I got out of my trade. I didn't wait for it to come back. It did that move. I got, I think, 115%.
Yeah, took it.
And that's an insane win. And you do not need to capture the entire move, but you just need to first let the market paint the picture and tell you, like, what doing, and then you can capitalize on that move.
Yeah.
That's why you say to look for the most probable move, not the best move of the day.
Exactly. And QQQ played a vital role, right? Because, I mean, look at QQQ here. If I'm in SPY, I take SPY short. Look, my cursors are matched. I take SPY short here. Look at QQQ with the perfect break and retest to the downside. That is insane. I cannot believe that. Look at that. It is luscious. I can't believe I didn't trade QQQ this day. But, I mean, perfect break, pre-market low break. So this was, you know, keeping me in the game super confidently. I mean, look at that matchup to demand, too, on QQQ. That was insane. And so whether or not, I know we talk about this all the time, but if you trade futures, even SPX or anything, you have to keep an eye on QQQ because this is a tool that is going to help you just make the correct move over here. I mean, look, if QQQ, the NASDAQ, is holding well below critical levels as well, this is just adding confirmation to your setup. So it was perfect. QQQ was a massive move. That one was probably...
Dude, I don't know what caused me to do it, but I caught that initial move that I just talked about on SPY. And then for whatever reason, I was like, you know what? I want to go to QQQ. I think it's because it had more room to the downside.
Yeah.
And I literally caught that move right at that bear
this one,
flag,
right?
And then I caught that sell-off.
Yeah.
I put in a trailing stop, and I just let it go. And dude, I literally got like 200% on that move.
Yeah, well, look, it's a $3 move.
Why QQQ? It was crazy.
It's a $3 move. Look at this. SPY was a $1.75 move to the downside. QQQ was a $3 move. And QQQ is $327 commodity. SPY is a $450. So this $3 move on SPY is like a $5 move. I've definitely seen way more volatility in ATR, average true range, on QQQ lately. It has way bigger price action going on. And another thing I really liked about QQQ was its rejection from previous day low during pre-market, right? So, and this right here is just like, okay, I'm understanding conditions are extremely bearish at this point. I mean, you're selling off way below pre-market low. And look at this. Like you said, Darren, price sells off like $2.50, and I don't feel the need to enter the trade. I actually was looking for longs right here, on QQQ, but once again I didn't see what I needed to see to go long, and it sold off right below it, tanked, and then it was breaking retest. So instead of just like all right, most probable trade, right? Instead of going, hey, this is a demand zone, I want to go long here and make some money, right? But there's a lot of chance here, and I understand chance is also uh there on a break and retest strategy, but this demand rejection just doesn't give me enough confidence that buyers are here. I understand we're getting wicks out of demand, but for me to even consider longs, I need to be above this open candle because buyers haven't proven to me they wanted it yet. And then, like, I used to get eaten alive on these setups, these demand rejections, right? Like, this is a perfect example right here on SPY. So let me just we'll talk about this on SPY because this is a perfect example here. So right here we have demand, right? We have pre-market low. So this, if I'm a reversal trader, this right here is a setup for a long, right? You get this Bayesian candle, right, guys? Remember, we used to take these all the time. Bayesian candle out of pre-market low, right? That used to be my setup on the 5 minute too. Candle makes
That's even on a 5 minute.
Yeah, that's on a 5 minute. So this looks lovely.
3 months ago, we would have gotten ravaged on this trade.
100%. 100%. This used to be my go-to. Pre-market low.
Me too.
Demand rejection. But now, for me to take this trade long, I need to be above this level here at 452.32. Like I because this break and retest.
At the very least.
Yes, this break and retest needs to be invalidated. It needs to be invalidated because this support or resistance right here, if this doesn't hold, then absolutely, I'm starting to look for longs to the upside, right? But we couldn't. So anytime you identify a demand zone and you got wait until you hold this previous low. I understand you're sacrificing 80 cents here, but it is a $4 move anyways. So you know what I mean? Just put that protection in, and then understand if it doesn't happen, catch the move to the downside. Like that's how I look at it now. So as price is playing out, this is what's going through my mind. Okay, demand right here, buyers showing up. So now right now it's like a poker player, right? Right now I'm about 70-30 to the long side, right? I'm about 70-30. I'm 70% sure buyers are going to show up, 30% that sellers are still here. Once this happens, this is now 90-10, right? Our 10-90. I am 10% sure buyers are in control, 90% sure sellers are here, right? Which trade do you want to take if it's 10-90, right? If you're 10% bullish, 90% bearish, I'm going with the bears. So that's kind of how like my brain works in this situation is like, okay, we got demand right here. I'm 90% sure buyers are here. And then all that goes out of the window once sellers defend this level. And it's like, okay, so now where's the next demand zone? Okay, 450. Okay, so now I'm going to risk 20 cents to make a $2.5 move. Bam.
Phenomenal.
Right, you know what I mean? Then it breaks and it's over. Right? So now and thinking like this is super beneficial. We did this Friday because now you're getting in at a way better entry than you are getting in right here. Right? So if you think this way, you're going to get in at 452.32 versus 451.32, right? So now you're getting in much quicker. You're identifying bearish conditions way quicker, helping you capture this move all the way to the downside. And then once again, I can't get out of this trade until an break and retest is invalidated. And that's literally what happened. Price rallied right into here and then just sold right off. So that whole method.
If you had waited for that move, that's like 100% move right there. If you had waited until price
This
check
one.
pre-market low.
Yeah.
If you caught that, I guarantee that's almost 100%
Yeah.
right there.
No,
Pretty close.
it was because I mean, even after getting
Oh,
in.
you had some contracts that went
Exactly.
that went there.
Yep. So.
But man, dude, what's crazy about this move that we're looking at right here at the beginning of this day is if you look at all the way up till 10:30, like if you just take a snapshot from 10:30 to the beginning of the day, that is exactly what Monday and Tuesday looked like.
Yeah.
And I took those trades short. But the difference is I stopped out of them really quick, and one of these winning trades took care of both of those losers that I had on Monday and Tuesday. Did I switch up my strategy? No. I took the exact same entry, and the difference is I had a stop on those other ones.
Yes.
Extremely tight stop. And one of these winners, one that actually went in my favor, took care of all those losers.
Exactly.
So, I went with the exact same setup on both of these days, Monday and Tuesday.
Yep.
Insane.
Yep.
I know that my strategy repeats, and if I have a clean stop, bam,
I'm good.
One winner will take care of two losers.
Exactly. And then once you trade that way, you have nothing. Now the market can't do anything to you. Can't. You can only.
It shows up, and I know I can control my losses.
Exactly.
It's over.
And that is the essence of consistency. I don't care if it's a $10,000 account or a $10 account. If you can implement that, that is consistency. See, people get it confused and they think, and I understand why, right? But I used to think consistency came from being right all the time. I used to really think that the consistency and all the wealth, XYZ, comes from being right all the time. And yes, it does play a massive role. But what's way more important is your ability to get out of a losing trade before it gets bloody. It's way more important than being right all the time, right? Because no one's going to ever be right all the time. It's not going to happen. You're not going to show up and put on winning trades every single day. And if you think that, you're just naive. You need to be able to understand, hey, I'm going to be in a bad situation. How do I handle that? Right. And that's what I really think consistency is from. Right. So like, Todd, let me ask you this. You literally risk a candle, right? Like when you enter a position, you're going to literally risk a candle. Right? Like it's and I love that. Like I learned a lot from that.
Yeah, I look at it like this. If I'm getting in on that candle for that reason and it stops me out, then my thesis is
wrong.
Not right.
Yes.
So, I'm wrong.
Yes.
So
you accept it.
To the next.
You accept it immediately. And and I love that because you're literally only trading your plan. Right? So you get in this candle, my stop is literally right above it. And that's why I love the break and retest. And that's why I avoid demand rejections. Because if I go long out of demand, my stop is literally $1 away. $1. Right? So, I mean, it's really hard to enter a demand rejection when selling's all the way. I mean, for you to get in at the lowest spot is just, that's sketchy. There's no validation there. You're just getting in low. And so you end up entering like right here. And you're literally risking, 40 cents. But this is the thing. Even if you have a hard stop in, right? Because this happens to me. Say I go long on this demand rejection and I buy my contracts for $100, right? Say I put my stop loss at $95. So I'm risking $5, right? When price rifles through these zones, your hard stop doesn't even get filled because it's literally going so fast. So you'll end up losing. Instead of getting out for $95, you're going to get out for like 88 or 85. That's literally happened to me before. Because everybody's selling. You're not in your little measly 10 contracts or whatever it is. I mean, yeah, they're going to get filled, but the guy that's selling, 10,000 contracts right here, do you think he, it's just how the auction works. You're not going to always get your price. So, yeah, it's another reason why I just look, I have to trade, continuations versus reversals. And I'm not hating whatsoever on people that trade reversals, not one bit. This is only just what works for me, and because I used to trade reversals every single day. Every day it was a reversal to me, and I still do. It's just I do it differently. You know what I mean? Like if buyers showed up here and we broke this level, came up, retested, I would have went long. You know what I mean? I literally would have went long targeting, this place. So
I used to do it too, but I feel like I did it because it felt fucking amazing. It felt amazing to pick the bottom of the market and just have price just rip my direction. I'm just like, holy.
If you got in at the best, yeah.
Oh, I got in on the perfect place.
Yeah.
And it's like now I don't want that. I don't want that feeling.
No.
I want what looks like the boring trade. I want what looks like I missed half of the move.
Yes.
I don't give a fuck. I am capturing the most probable move.
Yeah.
And it's something that I can repeat every single day.
Because you're gonna
make that I will repeat.
I call it. I mean, some of my trading, I call it reversal trading, but it's kind of almost. It's like the transition stage.
Exactly. Perfect word, Todd.
I'm looking for the first higher low.
Yes.
And the first lower high.
Yeah.
That's the transition stage of the reversal.
Right.
And that first higher low is that first really the reversal.
Right.
It's transitioning into the trend.
Exactly.
That's what I'm trying to catch every day.
But the only reason you took the trade is because it's a lower high, right?
Exactly.
You're going on a lower high. You're not going on the initial.
Perfect example. I'm not taking this trade long until we make a lower high, which would be right here, right? Because here's the low. I need to see. Yes, I'm sorry. Thank you. I need to see a higher low above this guy, right? Like I'm not taking this trade until buyers show me they can defend this level, right? Just like you're not going to give your kid the keys to the car until he can prove to you he can drive. It's the same thing, right? I'm not taking this long until buyers show me they're strong enough to defend this level. If buyers can show me that they have strength here, then I have confidence in them. If they don't, that means sellers still hold the court and I'm betting on them. So I love it. It's like it's just a mentality, you know what I mean? And then it's literally the same exact thing right here, right? You got this level, and I literally wrote in the Discord. I was like, I'm like, listen, I took this trade short, and then all this starts to happen, and I'm like, okay, I'm looking to add at 351.63, and my stop loss was literally 351.70, right? So now I'm looking at this the exact same way. I'm going, listen, if buyers can control this level, that's validating that they're getting stronger. But if they can't, sellers are still there. And that's when I looked at QQQ and just had major confluence or whatever, that the sellers were still way in control because QQQ was a blueprint to the break and retest. Literally.
Yep.
Blueprint.
But I mean, in that situation, you could have technically let your stop go like to the top of that green zone because you were already up like 20%.
Yeah.
So you had a little bit of cushion on that stop loss.
Right.
Even if you did lose on your adding position, overall, you'd probably still been green on that trade, even if you had to stop out.
Exactly. And that's what I love. Another reason why I love trading this way, because you have a clear entry, exit, stop loss, and that stop loss then graduates with your trade, right? Like it's the same exact thing. It's like if I take this short on QQQ, my stop loss is at 376.91. Price breaks down. Now my stop loss is this previous this candle, right? Because and technically I could leave it where it was, but now I'm locking in profits. You know what I mean? I'm locking in the move, and price then comes right down 373. Bam.
What I think is so cool about like all these rules that we make, and some about it in this way, but these rules that we're making with this break and retest is because it's extracting the emotions out of a trade.
Exactly.
Like, we've made emotional trades in the past,
Yeah,
and we've realized that it's gotten us nothing. So we want to set up a framework where we can operate by these certain rules, and those rules by default like eliminate the need to trade with emotions. They extract emotions out of the decision making process, and that's how this feeling of like effortless trading can come in, where it's just like it's because there was no emotions involved. It was just like strict fucking raw price action.
Exactly. You said that perfect. I am probably the most emotional trader in the world, which is how I finally got to this level. Because for me, listen, anxiety, fear, all that. It was literally who I was. I struggled so much for so long because I couldn't give up. Right? I literally traded 5 years of just constant shoveling shit. And then finally, I started to dive very deep into myself, accountability, strategy. And it was always like, how can I come up with a way to take all of that fear and anxiety out of the trade, right? Because once again, if I'm going long out of demand, right, there's still tons of fear here. I don't know what's going to happen, right? And I like that analogy of the whole I'm 90% bullish here, 10% bearish. And then when this happens, I'm now 90% bearish, 10% bullish. I'm letting price action control my thoughts now. I'm looking at price action and going, hey, this is what is happening. Sellers are controlling this level, right? So I am now bearish instead of just hoping this price breaks for longs. So you said that perfect, Darren. It's literally give yourself a strategy that's going to get rid of all the bullshit or the and I used to never be able to stomp out of trades. I used to let my losers blow me out. Now I literally enter here, buy contracts for 100. My stop is at 110. That's it. On to the next. If that means my trade for the day is done because option traders only get one trade based on buying power, that's it. That's the discipline it takes.
Yeah, it's probably because you couldn't accept that there was a 10% chance or a 20% chance or even a 40% chance that your trade wasn't going to work in your favor.
Yeah.
On every single candle, there is that 10%, 20% chance that your trade could completely reverse against you.
Yeah.
And to not stop out of your trade basically means that you are trying to convince yourself that there's a 100% chance that it's going to work in your favor. And you're basically not admitting that there's any percent chance that it could work against you.
Yeah.
And by not stopping out, you're basically trying to convince yourself that.
Yeah, just accepting risk.
Exactly, that's what it is.
Yeah, and then just developing that strategy has been very good. Next day here was really let me get rid of some of these lines. Okay, so this day was a little wild. Okay, so let me get rid of this guy. Remove.
Oh yeah, we got to talk about this day.
Yeah, this was a really good day.
Yeah,
now we're on Thursday.
Yeah, beauty.
Tell me about it. What trade? I fucked this one up. I went short twice.
I took the short. I guess y'all's time is like 11:30. The lower high. Boom.
Yeah.
It's in the thing.
All right. Ready? So, okay. So this is what I'm thinking, right? Price opens well below. Hold on. Let me just put end of day somewhere because I know it's right here. Oh yeah, perfect. Okay. Okay, so that's end of day. Let me just color it. A lot of purple up here. End of day money. Yo, that end of day is perfect for targets, man. I'm telling you.
EOD, let's go.
EOD. All right, so we're opening well below previous day low, right? Which is this level. Here's yesterday's low. And this is here, ready? I'm gonna put this chart on the right without pre-market data because it literally helps so much. SPX also I like looking at because it has no pre-market data, which kind of it just looks very well. Check it out. So this is what the day looked like. Price opening well below end of day. Price rallies literally to the cent. Let me fix this. Into yesterday's low, which is nothing other than a break and retest. I mean, look at it. Look at it without pre-market data. Support, break, resistance, sell. Literally, break and retest to the T. Love it. I did not take this trade because I bitched out. I don't know what it was. I seen price rally. I even said in the Discord, I'm like previous day low. We rallied into it. I think a reason why I didn't take it is because demand. I was expecting a inverse. Yes, exactly. I was expecting buyers to show up here. I didn't like it was literally only it was $1.50 move. I don't know. I just didn't take it. I missed it. It happened very fast. So anyways, price rallies, breaks below this level, which still I don't know what it was, but I figured if we could hold below this level, I just had my eye on this target down here at 444. Like I literally could not stop looking at this massive, and I'll tell you why. We had this gap. Look at this. So we had this level right here. Look at this gap. See this gap right here from 448 to 445 or whatever. I had my eye on closing that, right? So, and I had demand right off this candle. So I was like, if we can hold below that, we're going to sell off, which, and then I just took this short. And that's, once again, emotional decisions, dude. No one's perfect. This shit's going to happen. You know what I mean? It's how you deal with it, right? So we break below pre-market low. I go short on this candle. Dude, horrible trade. I go short right here. Price just rejects immediately. Bam, stomped out, done. On to the next. And it is what it is. It's part of the game. You know what I mean? So that was it. But look at that same level, pre-market low. We held perfect. So
yeah, so I went short. So after we bounced off that 447 level, and then when we came back, we pulled back. I thought this was a perfect 50% retracement from the high of day, and so I hopped in when I saw this massive bearish engulfing candle. But the thing which made it so easy for me was this higher low.
Yep.
Like as soon as we made a higher low,
it's over.
And buyers were actually stepping in, I was like, no doubt, buyers are here.
Yep.
And it made it super easy for me to stop out. I think it was like a 15% loss on this one. But it just made it really easy to stop out. And I was like, okay, inverse head and shoulders,
yep.
But these are the things that you have to look for
to
stop out. Make it as mechanical as possible to extract that emotion.
Exactly.
But yeah, man, and what's crazy is I have my eyes glued on 444, and what do you know? A day later, just absolutely knife into that exact zone that I was looking at. Like Friday, we made it there, but it's just delayed, And you don't know, you can't predict that's going to happen. It's just going to do what it's going to do.
Exactly, and that's why I'm keeping it super simple, high or low, right? Boom. Todd, what'd you do this day?
I shorted. I took a short. I wasn't in front of the computer in the morning.
Yeah.
I took on y'all's time, I guess it'd be the 11:28 candle on the 2-minute on the Qs.
Oh, okay. Let me pull up the cues. 11:28. Oh, you popped it up. You popped it at the top, or no? This one.
Yeah. Oh, that engulfing can't. I don't know. It might be 12:28.
Oh yeah. Yeah.
I played the reversal.
Oh,
This
okay.
is Thursday, right?
Yeah.
Yeah, that lower high.
Right here. Yep. Oh yeah. It's 128. Yep.
Yeah, 128. Yeah. See that big bar? I like playing big bars on the 2-minute.
Yep.
Big bars. I like big bars. They usually have follow through,
Yeah.
especially on a lower high, higher low.
Yeah. That lower high is.
and I played that when it comes down and can't make that higher high.
Yeah.
I like that. I like to mark that bottom.
Yeah.
Of it.
Yeah.
And a lot of the times, I won't wait for a retest. I'll take it.
Yeah.
If it's a big bar coming into it,
yeah,
I'll take it off the rip.
Yeah. Well,
And
you got
we got the retest too.
well,
so.
you got confidence in the strategy, so it's easy. I mean, I 100% agree. It's like, all right, so I ended up going long, right? I'm gonna tell you guys right now. I went long, and this is gonna sound a little crazy. Once we held this, and we flagged here. Once I got this large green candle, I entered my trade long, right? So, I mean, look at this. This is like kind of sketchy. But I literally took this trade long on this candle because I was confident enough that buyers have taken control of the market conditions, and end of day was way up here, right? So the risk reward was beautiful. And I knew all these sellers that got stomped out was fueling this move, right? A lot of other people were thinking how we were thinking on this short, and they got stomped out quick. So I wanted to be a part of this stomp out. So I got in on this candle here, and my stop loss was right, probably like VWAP, which probably not the best entry, but I was super confident in it. And I was willing to put on the risk. Initially, made like a 50-cent move, and then this is when I called it out in the Discord, the previous day high, because here I'm like, okay, or not previous day, just high of day. So I was like, okay, we're running into high of day, which was previous day low. So, but it's the way we were running into it. Right? We had volume, we bear flagged into it, and then we couldn't get below this level here at 449. And that's, I literally put in the Discord, my stop loss is 449. Because, and another thing I like, Todd, you'll like this, we made a higher high, right? So when price looked like this, hold on, the chart on the right, we made a new high. And the candle on the 5-minute closed very bullish. That right there told me a lot. If this 5-minute candle didn't close bullish, maybe a false breakout. But I've been using larger time frames and really looking at what the candle looks like. Like I've been using the 1 hour and like the 15-minute, the 5-minute. And when you're ripping, like look at this candle here. When you're ripping into a previous day high and the candle looks like that, I mean, I'm pretty bullish. You know what I mean? And so I really use these larger time frame candles. And once again, is this 100% guarantee? Absolutely not. But when you get a engulfing candle on a 1 hour, you can be pretty sure with a higher high, you can be pretty sure that this is going to take over. So, and then I have my stop in, I'm chilling, and then we get this false breakout. I'm still holding my stop. Doesn't matter to me. And then we just got that luscious move to end of day. And
beautiful.
yeah.
Something that I'm noticing that maybe this went into your thought process, but I think right at 44880, we basically had like acceptance around that area.
Exactly.
So like
Exactly.
so it's not that, it's basically a lack of selling, and price moved higher, and then it found acceptance at that level. So just the fact that it's finding acceptance at that newer high
Yes.
is technically a certain amount of validation to continue that move to the upside. And then you moved up to 440, and we found acceptance at high of day.
Yes.
So those are all like reasons why you would look to open long positions or just play with the continuation setup.
Well, exactly. It's validating conditions, right? You're 100% right. You nailed it right on the head. This acceptance right here is validating buyers are in control. I want to be with them. I don't want to assume that sellers are going to show up at high of day, even though they did. I do have my eye on this, but at the same time, we got an inverse head and shoulders. We have acceptance, right? And once we held, I first wanted to go long here. I think Vic, who's recently just joined the Discord, he first took the trade right here, right?
Oh, he's here.
Oh, is Vic here?
Yeah, he's not. Yeah.
Oh, what up, Vic? He might be muted. That's okay.
Yeah.
Okay. Yeah. Yeah.
He's here.
So Vic called this trade out here, took it long. And that was my first level, and I like that long because look, so this right here, right? You break this previous low or whatever you want to call it, resistance, and retest it. And I kind of missed this because I wasn't on it the way I thought I should have been. And then price rallied, bull flagged right here, found acceptance, took the market long, and then they just rip right in the end of day, perfect gap fill, and then got the massive reversal.
Yeah, Vic, feel free to chime in at any time, man.
Yeah, Vic.
What's going on, guys?
What's up, bro?
I had to change my settings really quick.
Okay.
I've been watching. I've been sitting here listening.
Good, man. I'm super glad you came.
No, thank you, man. I saw the alert.
Yeah.
And I was like, let me jump in and see what's going on.
Absolutely.
I've been watching, man. A lot of good stuff.
All right, cool. Yeah, absolutely. Yeah. So that's how this went right here. And once again, identifying a level, seeing who controls it, and trading with them. So, and what's really cool here, right? And before we go on to the next, is right here. There's all the sellers that thought price was going to continue to tank. They're not going to go long. They're not going to go short here. There's no, because you got to remember, there's two sides to every trade. There's a buyer, there's a seller, right? That's what makes up price action. So if sellers think price is going to go lower, right, they're not going to enter at certain places because they don't think it's going to happen, right? So when you're above high of day, ripping in the end of day, this is why you get these massive rips, because the seller's beliefs are not reinforced in any way. They have no confidence until a different level, right? And look at that break and retest off end of day to the downside. That was a perfect, and that's why we love these patterns, right? We love these setups because you're literally using a level and price action to tell you everything, right? Breaks below it.
I should have held that one a little longer, but I just decided to get out right there at the end of the day. I was like, this thing might get rejected.
Yeah.
Double top and come all the way back down.
Yeah. And that's still a slam dunk trade, though. Still a really well thought, good entry, good target, right? And there's nothing wrong with taking those wins. We talk about low hanging fruit all the time, right? Like because I used to always look back at trades and be like, I could have done better, or how'd I let that go? It is hard because sometimes these things rally, right? But at the same time, the market is a nut house, bro. This is all over the place. just because it happened to work today doesn't mean it'll work tomorrow. So anytime, I mean, if you're up 20, 30% and you want to lock in some profits, nothing wrong with that. I mean, for a long time, I couldn't hold a trade longer than 10%, 20, because the markets hurt me so bad. You know what I mean? So it's
as long as your wins are covering your losses.
Exactly.
You don't want to get into the point where you let your losses all go up to 30%, and then you're always trimming your winners at 30%.
Exactly.
You have to realize that that's not going to make you profitable.
Exactly.
And yes, you need to lock in profits at a certain point, but if you're always taking your profits at 30%, then you might need to start trimming your losses at 10%, 15%.
Exactly.
If you're trying to actually be profitable.
That's a really good point.
If 30% is covering your losses, that's perfectly fine.
Right.
You just need to make sure that it is,
Yeah. It's really that's for sure. Wicked good point there. But yeah, and then look at that though. Super nice rejection. Yeah, and then we'll jump right into Friday here. Friday was, oh my God, I can't believe this. That is insane. That would have that short, man.
Nuts, man.
All right, so let's check this out.
Crazy sell-off.
Yeah, I know that right there. And these things happen. I'm not gonna lie, and this is exactly why the market is just super humbling. But there's no one, these things happen. No one's in control of the market other than the people that are in control of the market, and we're not any of them. You know what I mean?
I traded SPX, guys, and those contracts went from freaking like 20 cents to $10, $1 to 45.
Yeah, that's crazy. Yeah, that move right there, especially on SPX, is like you could have turned $20 into probably 20 grand, and and we talked about those though, right? Like the expectations, and stuff like that. But let's see here real quick. I want to find end of day and just kind of go through what's going on here. Was this? Yeah, that was end of day way down here.
Do you guys know when non-farm payroll was last month? Because I seem to remember we had also crazy selling last month for for NFP as well.
Yeah, I'm not sure, but I definitely. Yeah, and
6.
Now look at this end of day. Look at this right here. This was a really good day right here. So I just kind of want to go through like what was going through my mind on this day. So initially, we held above previous high, right? I'm going to use the chart on the right here without pre-market data. It just kind of helps flesh it out here. But so this was holding well above previous day high. I first took the market long. I had a pretty good entry on this one because QQQ just had so much strength. So I hopped in the trade relatively early. I think it was right at 451, and then price rips up, and my stop loss is literally 451. I think it was 20, and that just happened to be 10. Like, I just bought my options for. I think I ended up buying my options for $70, and I only wanted to risk $10 on them, so that's just kind of where it stopped me. And I'm gonna shy away from morning trades. I guess it's all based on criteria, but I never got like a smooth retest. Now, and the way I want to talk about this is once again probabilities, right? So the probability. So say price rallies above previous day high here, right? And I'm looking on the chart on the right. So say price rallies way above this. I'm going to wait for price to come down and retest a level, right? Going long the first 2 minutes of the day is just, I don't know. I think I'm going to just get away from that because it's not really that probable. At least I felt I didn't feel in control of this setup whatsoever. I was just like hoping buyers continue to come in instead of like going, hey, I had a solid retest. Buyers defended this. Now I'm entering, right? So this was kind of like, I just went long, And once again, these things happen. And then I got stomped out. But what me and Darren were talking about earlier, which really made a lot of sense here, is me stomping out so fast helped me capture this move to the downside, right? So I literally stomped out on this candle, which in reality we were still holding VWAP, so like I could have stayed in, but I stomped out.
I actually jumped in right there on the call, and then I got wrecked, and then I got into my emotions, averaged in, and eventually made my money back, but it was overall
I'll give you
trade.
You know what, Vic? I completely understand why you took this long, though. I mean, you're holding above previous day high. VWAP's being respected. I mean, this is definitely higher than 50% retracement. So, I mean, there's a lot of good stuff there, right? I mean, look at that. That's 50% on the fib to the T. So that's still validating buyers are in control. That's a pretty good setup right there, right? So, and then look, price then makes a higher high, right? So this, I'm not gonna lie, I stomped out here, and then I was like, oh, she's gonna rally. You know what I mean? I thought for sure of it because you know how it works. You stomp out and then it goes your way. But then we got that massive selling, and I just kind of want to break down. Yeah, I want to break down what happened, right? So then we get this break and retest off this level, and very quickly it was like, okay, we're hopping in shorts here. That candle is what did it for me on the 2 minute. And this is another reason why the 2 minutes so effective is you're gonna see a super large red candle, right? Price comes in. I forgot what they call this. It's like a shooting or like a graveyard candle or something. But
shooting star.
Shooting star, massive wick, right? Symbolizing sellers are in control. And even though this was previous day high, right, where buyers should have came in and defended and they tried to, this just was acceptance of sellers completely. Like this was like, okay, sellers are way in control. So I was able to get a very good entry on this short, and price rallied right down to end of day, which proved to be a perfect place to go long.
That's where I averaged in all the way at the bottom, and I just
so you
all the way back up.
So you entered right here, Vic, on when you averaged
all
in
the way at the bottom.
Is that what you were looking at? Were you looking at end of day?
Right there, man. And then I just held until I got all the way back up.
So
and I sold at the top and made my money back plus an extra little 4 bet.
Hey.
And I'm glad because it just chopped after that, and it just killed my contract. And eventually, like later on, it just ripped up.
Yeah.
But then again, it just sold off and it went to hell, and it's probably still there right now.
Yeah. Well, you at least identifying end of day as a good entry point. That was good trade management. You know what I mean? Like, obviously, I'm not condoning holding through that, but at the same time, you made the best move on the chessboard that you could, given the circumstance. You know what I mean? So obviously, like, and that's why I love those hard stops, because like I said before, I couldn't control it. I could not stomp out of a trade mentally. I probably still can't. Money's super emotional, man. We all need this money. We got to move forward. And it's very hard to accept, that it's not even accepting that you're wrong. It's just the reality of the situation. You enter a trade.
Go ahead. I'm sorry.
No, yeah. Like, you enter a trade, you're up 40%, the market takes it immediately. It's hard to go, okay, I'm going to get out of this trade. Right. So, that's why those hard stops for me, right? I buy my contracts for 100. I am out at 80. You know what I mean? Like, that's it. Don't care. And it's still cool because if you say you buy your contracts for 100 right here, and then you set a hard stop, it's going to show you where that lines up with price. So you could still use it as, okay, because I like to put my stop losses where my strategy is invalidated. So it works really good. So that's what just works for me, because I can't, I'm not.
The only reason why I even averaged in is because it was so early in the day, and it's very rare that the contracts will zero out on SPX that early.
Right.
And any reversal or rip back up or down, it typically will give you your money back. So, and that's all I was looking for, man. I was just like, let me just average in, because I never do that, and let me just average in and make as much of my money back as possible. And I saw it ripping back up.
Yeah.
It broke up above my VWAP. It held. It popped up a little more, and as soon as I gave my money back, plus an extra like $15, but after fees, it was just $4. And I was just like, I'm out, man. Yeah. It's Friday. Just get out.
Yeah. And
I mean, but it proves to show that later in the day, there was a bigger opportunity than whatever was happening
right.
in the day. So,
right.
But let's say you did stop out of that trade, like initially, like whatever, like it went against you 15%, you stopped out. I would say the next best move on the chessboard would be to enter at this higher low at end of day.
Right.
So
yeah,
if that's what that's not a terrible move right there, you know.
Yeah.
And if your target was high of day and that consolidation around like 451, then I think you made a smart move. You know,
Absolutely.
Maybe you shouldn't have held it, but let's say you did, like you were able to separate your emotions and be like, look, this is an actual setup that's playing out.
Exactly.
I'm going long here. It's not a terrible move, you know?
No. Trade management.
Right. I agree.
We've all definitely all been there. I've done that millions of times, and you know, and that's the goal, right? Is to change, right? So, but I really like this this next move that happened, right? So once this happened, and then we got that beautiful lower high right there, right, symbolizing the reversal, right? This is something I want us all to really look forward going forward this week, because this lower high out of demand is really, you know, A plus. It symbolizes that sellers don't have as much strength. Price rips, and then this same level, right? And this is really cool. But this same level that I took shorts off, I was once again, right here, I'm 90% bearish, 10% bullish. But right here, if we get above this, I am now 90% bullish, 10% bearish. And that was literally my methodology going into my long. And it just goes to show, you don't have to catch the perfect entry, right? So say you missed the end of day entry, wait another $2, price consolidates. Okay, I took this long. Price then started to rally, and then using the 1 hour time frame as well, we were holding well over what is that, 451 or 2 or something like that. No, right here, we were holding over 450.80, which was previous day high, right? So once again, I'm using those levels to tell me who's in control, and look at the break and retest off of previous day high now, right? So once again, if you're trading a breakout, right, which would have been the 930 candle, breakout, I'm just getting in because I want to, versus the break and retest off that level, right? It's two completely different market auction scenarios and situations. Right here, sellers are letting buyers think they're in control, and then they just demolish. Right here, sellers are actually stomping out of their trade, right? All the people that went short here are now getting stomped out, and it's providing fuel to the upside. So I was able to get in on this little retest over here at 450.80 and catch a nice little move to the upside. And then I put my stop right here. Thank God, because I'm at the doctor's office, right? Doctor's telling me, hey, you know, you're healthy, doing good, blah, blah, blah. And I'm thinking 454 from this level. I mean, I was super bullish on the Discord. I was like, "Can we get the 457 gap fill?" I'm like, "Can we get that 457?" I wanted to fill this up. It just goes to show.
That was the next zone, though.
Yeah, and that's just how it works, right? I mean, this was my target here at 453. What is that? 50? Yeah, 57. And nope, sellers just wanted to take it, so they did. And that's where we use that lower high, right, on the 2-minute. This is going to tell you, hey, the reversal is happening, right? Once we broke this 452.25, I was out of the trade, and it just rallied down, man. And all those levels from prior played a role. So. Hey, listen, it was a really good week. I'm super pumped. This is going to be really good. Vic, welcome. I'm so happy to have you.
Thank you, man.
No, seriously, absolutely. And this is going to be a really good time, really good year. So that's it, though, guys. We went a little over, but I think it was a really good recap. Thank you, everybody, for showing up. And let's just keep pushing forward.
Thank you, man.
Yeah, absolutely. And just being the best that we absolutely can. All right. So, everybody, I will see you guys Monday.
Sounds good, man. Thanks for showing up. And have a good weekend. I'll see everyone on Monday.
Likewise.